Hey guys, Boris from BK Forex. Welcome to our Forex Daily Technicals for 9/26/13. As always, please take a look at the disclaimer and note that trading foreign exchange or margin carries a high level risk and may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks of trading on margin and seek advice from an independent financial advisor if you have any doubts. Let's take a look at the charts. As soon as I can grab my charts here. Let's take a look at the euro first. It's been a relatively quiet week, and we just still continue to be in this low volatility environment. But euro did definitely get a bit a little bit today. Not only did we hold the 3450s, we got it tested twice. We did come back above the 3500s. Still, in many ways, this 3567, 3570, very, very key level. That's really the key upside level that needs to be broken if you're going to have a continuation of the move to the euro. It was definitely a more mildly bid move today, but still very inconclusive. And I think if you get a reversal tomorrow, it could be just one of those kind of churn days where you could have potentially all the longs get flushed out again as we drop below the 3500s. Anyways, for now, the path leaves resistance is certainly to the upside. Euro looks relatively mildly bid. We have to see how well it's going to get taken for the rest of the day. But until and unless it kind of clears this 3570 level, it still has an overhead supply here, and that's a key thing to keep in mind. It's still, I don't think, a momentum buy until it kind of can clear this level, and then possibly move on to the 3600s, 3650s. The ultimate target for the longs here is, of course, the yearly highs around 3700, and that could happen if you do break out these highs here. On the other hand, if we kind of consolidate, come right back down into the 3450s, that's really the key level to hold. 3450 below, if that's given, really opens up the potential for a full unwind and a basically fresh new swing high at this level that gives the opportunity to basically take out, return right back to the 3350s, which was the Fed breakout zone. So that's the euro. The cable looks much better. It held the 60s much better yesterday. And definitely had a stronger day today. But again, also cable was 6150 is the key level. That's the big level to break out post FOMC highs. On the other hand, a break below 6000, really a break below 5950 is the key support level. Really takes us right back down to the 5800. So similar kind of a story, but just a wider range, a little bit better tone in the Kiwi. Dollar yen looks relatively weak in my opinion, and still continues to trade around basically this whole point of 98.50, 99, 99.50 zone. But if you notice, it's just making lower highs continuously, starts to continuously compress. If you, on a longer term basis, basically since 150 has been made, it's been doing nothing but lower highs, and it starts to pressure to the downside. Having said this, though, there's just this big level of support, 98.50, 9800, and for real downside deceleration, you really need to have these two levels broken. So we have to watch this very carefully for the time being. But I don't know. I still think yen looks like garbage here, and every rally has been kind of a fake out. So the longer term pressure here is to the downside, and if this gets given, we certainly can test 9800s in early Asia today as the day progresses. And then lastly, taking a look at the Aussie. Both the Aussie and the Kiwi starting to really give back much more their gains than even the other majors. And Aussie coming in now into the 93.50s zone. It definitely broke 93.50s yesterday, came back up above it, but now a second test into this area really opens up a run towards 9300 and a possible test of this 92.50 support level. And the Kiwi definitely puked up very hard in overnight trade. Kind of consolidating now a little bit above in front of the 82 level, but here again, 82 is a critical level. That gets given, it takes us right back towards the 81. So everything looks to be sliding against the dollar, except the dollar yen, which seems to be strengthening. But still, very tentative moves. There's little to really want to get excited about, but we are coming close to kind of key levels. And one of the key things that I think is very, very important to watch out is the fact that because you have such indecision, every single move could be a fake out. So you have to be very careful, keep the stops tight, and watch for possible reversals all the way. Having said this, though, I do think dollar yen looks to be 98. Excuse me. And for the time being, Kiwi and Aussie continue to be the relative laggards with potential tests of 8100 as we go forward. So that's the trade for today. Wish you guys the best of luck, the best of trading. Sports Last Book over.